Hey, what is up? My name is Omar, and today we're going to be looking at my Robinhood portfolio. As you see, we are up $283 on the 3-month chart, but if you're seeing what I'm seeing, let me just hover over this real quick. $2,000, 550, $573. It was like 550 something. And now we're at 1,400 bucks. So, very choppy. If we go to my 1 year, started off with $530 initial investment, went up to 2K, went all the way down to 550, 550 here, 780, and then 500. So it's been very choppy for me, and it's been very hard to understand. I'm still in my first year of options trading and in the stock market in general, and my whole time being in the stock platform, I've been in a pandemic. Look, I started January 27th, and I think it was like around this time when like the pandemic actually started picking up, and then I think around here is when we actually like schools got closed. Like we're not going to school anymore, so learn from home. I think it was around this time here, so that was a bit crazy. But if we look at my weekly chart, we're up $525 or 61% for the week, which is awesome because if we look at the SPY, we completely outperformed it. It is actually down 2.4% or $8. And a lot of people had very bad weeks. They had very red weeks. And here are the plays that ended up making me a lot of profit. So I did a BA, being Boeing, $145 put for $918. I bought it at $119, and then I ended up selling it that day for $185, giving me 66 bucks. If you guys don't know, this is the strike price, so this is what you think the stock can go down to. Do I think it was going to hit $145? No, it was just the premium was right, and I felt like I could still make some decent money on Boeing, since on that Friday it was still green and the whole market was red, so I bought into that. And this is the expiration date, meaning when your option is going to be gone. So if it isn't at this strike price or close to it, then you're basically going to be looking at a worthless option, which means this is going to be like under $10, and you're going to lose most of your initial investment. September 4th here is just when I bought it in a contract. It says $1.85, but when you buy one contract, you're basically saying that you can buy 100 shares of this company. It's giving you the option to, so that's why it's called options. Whenever you see contract, you have to times this number by 100, which gives you $185. Now, this was my big trade of the week. If we look here, Apple, $113.75 put, expired on 9/11, and I bought it. If you see a sell, that means you're closing a position or you're selling premium, and that is a whole different video, but you can look into that. Just look up selling covered puts or calls or whatever, running the wheel strategy. Here is when I bought it, September 4th. I bought one contract for $2.10 times 100, which is $210. And then I actually closed that same position out for $536, giving me a total profit of $326. And this was all within a span of 2-3 hours. But man, was I looking at my phone watching Apple go up, down, up, down. I'm losing $70. I'm up 50 bucks. I'm down 130, I think, at one point. And man, it was just so stressful. But I pushed through it and I held on because I believed that it would go down a little more, and we ended up selling for a nice $326 profit, which was amazing. One of my bigger trades of the month, honestly, in my career, I guess you would say. And it was kind of hard because I haven't traded with that much capital before on such a volatile options play. And then this is a bit of a mess here. I was just kind of lowering my cost average, and I was lowering it down because I thought the SPY still had a little more room to go down, and it did, so we were lucky. As you see, all of these are traded within the same day. So September 4th, I bought it. September 4th, I sold it. September 4th, I bought it. September 4th, I sold it. September 3rd, September 3rd. So what this means is I'm using a day trade, but luckily you get 3 free day trades. People have the problem when they want to do a 4th day trade, which means that they're going to get PDT unless they have a cash account, which I believe Robinhood doesn't allow you to do options with cash account. So if you're going to be doing options on Robinhood, you're going to have to remember your day trades, and Robinhood does that for you. But I like having my day trades on Thursday and Friday. I have one on Thursday and then 2 on Friday. That's kind of what I've been sticking to, and it's been helping me a lot. It helps you not overtrade, because if you didn't have a PDT rule, then people with new accounts, they would just be trying to day trade because they see their favorite guru trying to day trade, and they would lose a lot of money. So I think it's very good that the PDT rule exists. I wish you could kind of like take a test and maybe opt out of it, or if you pulled enough profit, then maybe you could do it. But you need $25,000 if you want to get rid of the PDT rule, and you have to have a portfolio value of 25K. So not many people have that when they're starting out and they're using Robinhood, but it is put in place for a reason. So don't get too mad. Just kind of keep track of your day trades. What I found works for me, maybe it won't work for you, but you can kind of do some research on your own, is buy calls and puts, kind of strangle some companies and stocks that you enjoy. I like Apple, Boeing. I started doing some USO just because oil was having a bit of a rough time. QQQ puts made me a good amount of money. I didn't talk about those, which you have to be leveraged in both ways. People who lost money were probably call heavy, and they just lost a lot of money that way. That's how I've lost a lot of money, is just being over leveraged in one position, or just one way that the market can move. Because if the market moves in the opposite way, if you don't have time on that contract, your account's going to get blown up. So out of the money is what I like to do. I like to do further expirations. I've been kind of playing with close expirations and closer to the money, like weeklies or 2 weeks. And those can make you a good amount of money, as we saw with Apple. But man, they're so volatile. You have to be on your phone, like looking at them until you sell them. So if you don't have that much time, I would just go, a month out. Try to find, if you want to be in the money, that's fine. If you want to be out of the money and kind of turn $60 into like $200 or plus, you can do that too. Out of the money is just going to be cheaper contracts, but you're going to have theta decay, and you're going to have a lot more variables that go into play. So yeah, that's kind of what took me to my $1,400. I'm trying to learn, just as many of us are. That's probably why you're watching this video. You're trying to learn, and don't feel bad if you have bad trades. Don't think anybody has 100% winnable trades or they profit every week. If you lose, just step back, recoup yourself. Try to figure out what you're doing wrong and what your issues are with trading. Just like with everything in life, it's going to take practice. So consistency is key, which is what I'm going to start doing. I'm going to try to upload 3 videos a week. Monday, Wednesday, Friday is what I want to do, but that schedule might change. For right now, I'm just going to try to get 3 videos uploaded per week. Doesn't matter what day those end up being on. But hopefully you learned something from this video. If you did enjoy, please leave a like and subscribe. I'm going to be trying to bust out more content for you guys. So yeah, hopefully you enjoy your Memorial Day, and I'm out. Peace.